Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here. So, before we get into everything you're going to need to know for the week ahead, please hit that like button for me. And if you are new, consider subscribing to the channel. Now, up on the screen right here, huge earnings week. Last week, huge earnings week. And it has propelled the market higher. All right, so all those big mega cap tech stocks, they all beat earnings. They all raised guidance. Keeping in mind that to beat the earnings estimates that were already lowered doesn't necessarily mean that the companies are in great shape. Because those were so lowered, it set a lower bar to beat. But granted, they did beat, and the guidance was okay. And those stocks ran to highs for the year. All right. So, this coming week, we have Apple on Thursday, right? We have Starbucks up here on Tuesday. We have Uber and AMD on Tuesday. There's a lot of stocks here that can definitely help move the market. So there's your earnings for the week. All right. So now I want to go over something that we've touched on in the last couple weekly watch list videos, but I feel like it's very important with this market just so on fire, understanding what is driving the market. Now, right up here is the QQQ. This is the NASDAQ market. That's the ETF that tracks all those mega tech stocks. And you can see right there, you have Microsoft, Apple, Amazon, NVIDIA, Google, Meta, and Tesla. Those are the top weighting for that ETF. And you add those up, and that's over 50% of the entire index is based off of those 7 companies. Really just incredible to see. So those 7 companies are all trading really high, other than Tesla. That still hasn't broken out for highs for the year. But Meta, Google, NVIDIA, Amazon is kind of floundering along a little bit. But Apple, Microsoft, all those stocks are just poking at that high for the year. So that's why the QQQ is on a roll. How long will it last? Who knows? But that's the QQQ, and those are your heavy weighting stocks that are making up a majority of the gains at over 50% of that ETF. So keep that in mind. When those stocks are ripping, most likely you're not going to want to go against the QQQ. Okay, so right here is your bond yields. Now you have the shorter dated in yellow, you have the longer dated in purple. This is a curve inversion on the yields. Has basically predicted a recession every time. We saw the GDP number come in. That was a lot weaker than expected. So you're going to start to hear that recession talk creep back into the market. Right now, the market was just screaming higher. You're getting a lot more bulls activated in the market. When that changes, you'll start to hear recession talk, recession fears. You'll start to hear the yield curve again. I'm here to show you that it is still active, even though you're not hearing about it. It is still screaming recession coming. So keep that in mind right there. All right, let's go over to the sectors and how they performed relative to each other. Now, if we look here on the 1 week relative performance, again, technology, communication services, this is your Googles, this is your Metas. These are the stocks that I was showing you on the QQQ, and they've been killing it. 1 month, killing it. 3 months, killing it. Year to date, just destroying the rest of the market. This is the QQQ right here. Just huge green on the year. It's up over 23%. It's had a just monster move. So that's what you're seeing right now in your sectors. Those are the hot ones. Now, what has started to creep up here is the healthcare, right? So 1 month relative performance, healthcare is now tied with the Metas, the Googles. So keep that in mind right there. It's starting to creep up the leaderboard. That's a more defensive type of sector as well. So we'll keep that on watch. Okay, guys, now coming over to our economic calendar for the week. What's standing out to me is very clear. That's on Wednesday, and that's the FOMC interest rate decision. What will they do? Will they go a quarter percent? Probably. That's what's baked into the market right now. But I'm more interested in what Powell has to say at 2:30. This trading day can be very volatile. Keep that in mind. What happens at 2 o'clock can sometimes reverse when Powell starts to talk. All right. So that's really important. That's going to be on Wednesday. And then on Friday, that's the jobs report. It's going to be a huge report. I really think that the labor market and trying to get some color behind what's going on with the labor market is going to be what is looked at going forward. We know inflation is coming down, so the CPIs, the PPIs, the PCEs, all those reports are showing inflation coming down. All right, that's in the market right now. Inflation on its way down. The only thing that could change that is if those reports start to just get tough, right? They just level off and they don't keep coming down and then maybe go up a little bit. That is the only thing that would change with inflation as far as I'm concerned. The only thing that hasn't changed yet is those jobs numbers. And we're starting to see a little bit more weakness with the unemployment claims lately. So I'm very interested in the jobs report, interested in the unemployment rate. And, you know, if a recession is to come, these numbers would have to change dramatically. The unemployment rate would have to go up a lot. So this is something I'm definitely dialed in on. And that'll be on Friday. Okay, now onto our compass. That's the SPY. Now, taking a look at this, this is the last year of trading for the SPY. This is the daily chart. The indicators that I use are the 200 moving average, which is this orange line, the 50 moving average, which is this cream colored line, and then the 20 EMA for momentum. You could see that 20 EMA is making a series of higher highs and higher lows, and now we're going and making that higher high again. Now, what I'm expecting is every time it has made a higher high, that's when it starts to pull back. This is the market right now that we're looking at. It's been in a range for the past year. I mean, we've been around this 4,000, 4,100, approaching 4,200 on the S&P 500. So looking at the SPX, that's where we're at right now. We did close at the highest point since February 2nd. All right. This has been a very nice move. It's been a very good move out of the lows that we saw here. Now, if we look back on the SPY, this was glaring. This stands out to me every single time I look at the SPY. When the SPY came down in March to that support level that we saw here, that 380 area, all right, look at the volume. Look at that volume that poured in right here. That is the big guys. That's the smart money buying down here. Now, who's going to be buying up here? You can see that the volume is nowhere close to where it was at the beginning of March. All right, so will the smart money be buying at highs for the year? Well, we're just going to have to wait and see. Normally, they get in at the lows. They're not buying the breakouts. All right, that's for the retail traders. That's for the FOMO. So I don't want to get caught on the wrong side of it. I also do not want to get caught being a bear in a very bullish stage right now, like we've seen. This is the weekly chart. This is the weekly candle. All right. We've been consolidating. I don't want to be going against that. All right. So that's the weekly right here. This big bullish hammer candle. That's really bullish. I don't want to be going against. Now, what I'm seeing is this 420 area, which has been support before, and then it turned into resistance. Resistance. What will it do here? That's going to be around that 4,200 level on the SPX, the S&P 500. So if we look at this back on the daily chart, you have a gap to fill, which goes right back to this area at about 4,220 on the S&P 500. We're approaching the 4,200. That 4,200 was approached almost to the penny back there on February 2nd. The market, to me, looks like it wants to at least test out that 4,200 level. All right, that's just the way that this looks, the trend, everything is looking like it wants to at least try for those highs for the year. That's the SPX, the S&P 500 on the SPY. That would be to about this 421.75, 423-ish area, and that's where that would be. So that's the SPY. If we look at the Qs, we had a nice breakout of all this consolidation. Now, something really important, and this goes back to, trading in a community. We have our Discord community. I'll leave that link down below for you guys if you're interested in joining. But in our Discord community, we had a couple of traders talking about this really big demand zone down here on the Qs. And we saw this demand at the 310 level on the Qs and then had a really nice bounce. Now, the only thing is, if we take a look at where we've been consolidating, it's been in this box. We got outside the box into demand, saw what that did. Now we're getting outside of the box on this end. Will we see a similar move like we saw down here? Once it jumps out into this area, will this be that level and that area of supply that brings us back down? All right, that's on the Qs right now. It had a nice breakout. The Qs have had a heck of a run from lows to highs, over 23%. It's been a great move. All right, and it has been consolidating for a while. So we did see a little bit of a breakout here. I need to see on Monday, Tuesday, Wednesday, I need to see this continue really hard. If it doesn't and it struggles over here, it's just a matter of time before that comes back down. All right. So that's on the QQQ. On the Dow Jones, taking a look here, this is just right back inside of consolidation. I am not expecting much from the Dow. Now, the Dow has held up a lot better than the rest of the other indexes. On the highs here, it's just down right here about 7%. That's pretty impressive. So the Dow has held up pretty good, but it's just coming right back into this consolidation. I'm not excited about it at these levels right here. So that's the Dow, the IWM, which is the Russell 2K. These are the small caps. We look at this on the daily chart. It was support again, came back down to support, bounced once again. So this is what the IWM does. The levels on the IWM tend to hold up pretty good. So this is holding support here. There's a possibility that this can then break out. But right now, that's where we're seeing this. It's got a little bit of a death cross here as the 50 goes under that 200 moving average. So be careful with that. That's your small caps. These are your regional banks. A lot of those type of companies are in the IWM. Okay, so some stocks that I'm looking at for the week. Uber has earnings on Tuesday. This looks to me, if we look at this on the 3-year, this is a bearish to bullish reversal. That's what I'm seeing on Uber. A bearish to bullish reversal where it finally finds support and then starts making higher highs, higher lows. A nice bounce here off of the 200 moving average. This is telling me that a lot of algorithms, a lot of traders think that this deserves to be over the 200. Once it gets over the 200, supports here, then it's going to go for the 50, break the 50, and go back to highs here. Uber has earnings, like I said. We've seen a very good reaction after earnings so far on those tech stocks. Uber was one of these stocks that was all the way up here back in the pandemic, sold off. So this has some room to go. So I'm very bullish right now on Uber going into earnings, seeing this support at the 200 moving average. I really like this stock this week. All right, looking at Alibaba right now, this is at support. And if this does continue to hold up as support, this can move pretty quickly. It was at a low RSI, oversold, and now I'm expecting a bit of a bounce here on Alibaba. All right, another stock that I have on my watch list is Meta. Now, the 3-day rule applies to this. This stock gapped up a huge percent after earnings, more than 10%. The 3-day rule applies. Anything over or going down 10% does not get touched for 3 days. Until I see that start to have some weakness, which we've seen here, right? When earnings came out for the first earnings report this year, it gapped up a huge amount. 3-day rule started to sell off. Gapped up here. 3-day rule is what I'm going to wait for. And then I'm going to look to fade Meta. Meta is at extremely overbought levels on the RSI. So I'm going to wait on that, but I'm going to be looking to take that one short. All right, so another one I'm looking at is the SMH. This is the semiconductors. We've seen a very nice climb out. All right, bearish to bullish reversal, just screaming that move, a nice bounce off the trend line. I'm expecting this to make higher highs. All right, so that's the SMH. I would be bullish this, especially if it can break the 50 and the 20 EMA right here on the daily chart. Another one I'm looking at is that healthcare ETF. This is something we started to notice in the sectors that it's starting to turn around. So I would be looking for this to come back up to right about here. So it's traded in this range. I'm expecting this to move back up to resistance. I would be looking for a trade on this for, this 140-ish area. And that's on the healthcare ETF XLV. Now, what I want to show you guys, and we can't ignore this, the VIX. The VIX, look at that move. Just at the lowest close since 2021. Really remarkable, the lack of fear in the market right now. Now, a lot of times, this is a good indication of maybe a market top for the moment. So I would definitely be a little cautious as we get more bullish talk, more bulls coming into the market. Most likely that's going to show a market top, and we're going to start to sell off a little bit, all right? So keep that in mind. That's the VIX right there. Okay, guys, so I hope you enjoyed the video. Please hit that thumbs up for it, and I'll see you guys on the next one. Take care, guys.